So we have really, really big breaking news in today's update, which is really the fact that the Federal Reserve in their last meeting has now officially announced that they will be pausing rates. Now, you might have seen another video talking about this similar topic, but the big idea is, and I have as well, but the big idea is that there's also been a lot of complication to what's been going on. So in today's video, what I really want to do is just to talk a little bit about what's been going on in the economy and the significance about this, but even more specifically in simplified terms. So hopefully everyone can kind of understand and be on the same page to what's been going on. This is really, really important information because the big idea is that if you are someone that's invested in stocks, in housing, then this is going to impact you obviously. It's going to impact the labor market as well if you're on the hunt for looking for a new job. And it's even going to impact things like our everyday lives, because the thing is that if they're not able to control inflation, then it means everything is going to get a lot more expensive. And if things get a lot more expensive, then it means it's going to be a lot harder to sustain, and our money is just simply put, it's not going to go as far. So that's why all of this stuff is going to be pretty important, and we're going to be talking about it in today's episode. So with that being said, let's just get started. But as always, like, comment, subscribe if you guys enjoy videos like this, and let's get started. So the story to what's been going on right now is that essentially they've recently announced, as just mentioned, is that they're going to be pausing the interest rates. The federal fund rate right now currently stands at about 5.25 to 5.5%. And what the goal is that what they're trying to achieve is to bring the inflation rate down to around 2%. So I know that there's so many different rates and numbers that you have to, really understand what's going on out there. There's obviously the inflation rate, then there's the interest rates, and within each of these rates you have like the CPI numbers and everything like that. But the big idea is that there are two separate numbers. The big goal is that they're going to be trying to raise or maintain interest rates in order to try to bring down the inflation rate to 2%. And that's their basically target, the goal that they're trying to achieve right now at this time. Now, within the actual interest rate situation slash inflation, the big idea is that what they're going to do is that they're going to be trying their best to control it by raising or maintaining the interest rates. In this particular situation, what they're really doing is that they're going to be maintaining rates, and in other words, trying to keep it the same before they drop the interest rates again, which is basically what people are going to be now calling the Fed pivot. Now, when will this Fed pivot occur? We're going to talk about that in a little bit, so definitely stay tuned in a little bit. So, definitely continue watching. But the idea is that a little bit of inflation is actually pretty good for the economy, because when you have a little bit of inflation, what this means is that it means that we're being productive. The economy, the GDP, everything like that, is that we're making progress or economic progress in terms of what we're doing. So that's the really, really big important thing. However, when you have too much inflation, then what really ends up happening is that prices start to go up too fast, and then that becomes a bad thing, because it means that now we're no longer able to afford basic necessities and everyday goods. So now that you kind of have a big picture of what's going on, what is the significance to all of this? Is that the biggest significance is that if you are an investor of some kind, and we're going to talk about what happens if maybe you're not an investor and why this is important, but the idea is to start on the investor side is that if you are an investor, say for example you're invested in stocks or the housing market, then this is going to be very, very impactful, because it means that in the short term, if they're maintaining rates and not cutting them, it means that prices of stocks and everything is possibly going to, or very likely is going to go down, because there's obviously so many other factors. But keeping everything aside the same, it means that the stock prices are going to be going down, and that's going to be the bad news about it. Now, it's also going to impact the labor market as well. If you are someone that's looking for a job right now, it's going to make it very, very difficult. The logic behind this is that because if interest rates stay relatively high, then it means that the inflation situation is not doing very, very well. And if the inflation situation is not doing very well, it's going to make a lot of companies struggle. The reason given is that because it's going to make it a lot harder to borrow money. If you're a new company, a lot of big startups are operating on a loan. They're not making a lot of money. They're using money that they've borrowed in order to keep their business funded. Even if you're a business that, let's say for example, you're not operating off of loans and you have plenty of money money to be able to work with, this is still going to be relatively bad because it means that the higher cost is going to eat into your profit margin. So not only now is it going to be difficult because of the interest rates to borrow money, but it's also going to be as difficult to make physical money because it means that everything's going to be expensive. And if businesses are not doing well, then you can bet that they're not going to be hiring as many people. And so that's going to be impacting the labor market as well. And then of course, as mentioned, is that in our personal lives, the significance about this is that it means it's not going to go as far. Our money is not going to be able to go as far, and it's going to be very, very difficult to afford basic goods. And I don't even have to list out the numbers because most of us probably already know all of the goods, things such as like groceries, eggs, fruit, daily food, expenses, electricity, all this stuff. It's going up in price. It's getting very, very expensive. And these are costs that we can't even cut out from our budget, because I've made so many videos talking about saving money, which I'm going to link them at the end screen after you watch this video that you can check out if you're interested. But the idea behind it is that it's going to make it very, very difficult to save money because a lot of this stuff are basic necessities. We need to pay for these things. They're kind of unavoidable expenses that we have to pay for to keep ourselves alive and sustained. There are obviously strategies that I've talked about in that video to kind of reduce the cost of everything. But at the end of the day, there is only so much we can do and so many uncontrollable factors that come into play when you are dealing with this kind of particular situation. So now talking a little bit about my personal prediction about where we are headed. So this is the part that's a little bit of a personal note. So you're not going to find this from a lot of other videos because this comes from the personal insight that I have to maybe be able to share. Is that if you are an investor, right? Because of the situation with stocks and housing and everything like that, my personal prediction is that because at this point in time, because they recently announced that they're going to be maintaining rates and they're not going to be cutting it anymore, at least for the foreseeable future, they're still going to be cutting, but just not cutting now. That's the big idea. I predict that in the near future, stock prices, as much as I don't want to say this, I'd rather see stock prices skyrocket because that means we have more money in our pockets to be able to enjoy life. I predict right now that in the near future, as hard as it is to say, that prices are probably going to start going down. So it means that stock prices are going to be crashing a little bit. And we're already starting to see that. So it's not just a prediction. We're just trying to see the long-term trajectory of where this is headed. In the near future, it means that things are going to drop down. However, I do believe is that when they're actually ready to pivot, which it's just all it is that it's just going to take a little bit longer for us to see that particular pivot. But once the pivot happens, it means that in the long-term future, we will start to see prices of stocks go back up and shoot up again. But it's just the big idea is just to see how much prices actually drop between now and when the actual Fed pivot occurs. Now, when do I think the Fed pivot is going to occur? My personal prediction right now is it's probably going to take at least a couple months to be able to sustain, especially since they've already announced that they're going in the wrong direction again. So my personal prediction is maybe at best the end of this summer. So summer just started, so maybe in about 3 months or so. That's my personal prediction at best. At worst, around the end of this year. So sometime between the end of this summer and then the end of this year, that's probably going to be when the Fed pivot actually occurs. But of course, this is predicting the future and nobody knows the future, of course. So that's why this is purely a prediction. So in terms of the labor market, on the other hand, I also believe that we're going to be having a struggling labor market tide again for the near future. But I do believe that in the long-term future, assuming that they're able to control inflation and everything that's going on, we do have a relatively bright positive future coming up ahead of us if they're able to do everything right, of course, because they still have to, again, get everything under control. Now, what is the best move from here is that there are going to be some people that can walk out with a lot of money during this time period, at least at the very, very end. I did make a video already talking about, I believe it's literally, I think the name of that video is like Your Chance to Get Rich, which talks about the things that you should possibly do right now before the actual Fed pivot and before they start cutting interest rates again. So I highly recommend checking that video out. I'll put it at the very, very end screen. You can watch that after you watch this video as well. But the idea really is that the best move is that if you are an investor of some kind, so for example, let's just take, for example, the stock market. If you are an investor in stocks, And then the big idea is that in the near future, because the prediction is that stocks are going to be going down in the near future, it may be worth it to wait it out maybe about a month or so, now that we're, especially right now because we're in earnings season, but it might be worth it to maybe wait out for about a month or so and then start to kind of gradually buy into the stock market, and then hope that when the reversal happens, that stock prices will finally shoot back up again, and then that's going to be where many people are hopefully going to potentially make money out of this. Now, in terms of what this means for our daily lives, so say for example you don't care about it, right? Maybe you're not an investor, maybe you don't have the money to invest or anything like that, then the idea is that in our personal everyday lives, outside of just investing in general, it means, and I've talked about it in that video again, that's why I highly recommend checking that out, Your Chance to Get Rich in 5 Things to Do. But if you are, let's say, not an investor, then the idea really is that this might be a reasonable time, because again, going back is that inflation is not going to go down. So we're not going to have deflation. We're just going to have inflation less. So prices are still going to shoot up, but just not as high. That's at least the goal that they're trying to achieve right now. So what this means is that it might be time to maybe enjoy life a little bit, because the idea really behind this one is that if you don't try to enjoy life now, so things such as like travel, dining, food, personal pleasures, goods, and everything in that world, it's just going to get more expensive to enjoy it later on. So if you are trying to, like, you know, if you have some level of money to be able to put into it, maybe just take that money and enjoy life for a little bit. Now, say for example, you're someone that does not have that money, then it might be time to play defense, to be very, very defensive, try to find employment, try to improve your job, try to increase your income, and be very, very protective about your job and where your money is going, because at this point, it's going to potentially be survival mode. But of course, all of this stuff, we just have to see what ultimately ends up happening, or ultimately what the Federal Reserve decides in the coming episodes of The Kevin Show. So with that being said, hopefully you guys enjoyed that particular update. If you guys did, remember to smash the like button. It's always greatly appreciated. Or leave a comment for suggestions or improvements. Consider subscribing, hitting the bell, and hope to see you guys next time. Thank you guys so much again.